Hello, family and beautiful people. Today we're going to go over multi-timeframe confluence, and I'm going to show you how you can catch bigger moves when you understand exactly what multi-timeframe confluence is. So without further ado, let's go ahead and get started. So multi-timeframe confluence is when you have all your weekly, daily, your 4 hour, your 1 hour, even if down to your entry aligning with the same direction. Like if that means if everything's buying or everything's selling. And so the way you want to kind of identify that is start high and do your top down analysis. Now, just because we're on a weekly doesn't mean we're taking entries on the weeklies unless you're a swing trader. I'm just saying go to your weekly time frame to kind of see what the market has been doing in the last few weeks. You want to go with current market. We're not going to take weeks from way back here. Now, I am in replay mode, so I can kind of show you what I mean. And like each candle is worth a week. So we know these last 4 weeks, the market had been trending up. So now I have in my mind, I've taken a mental note that we're bullish weekly. Now I'm going to drop to my daily and I'm going to ask myself, is the daily doing the same thing as the weekly? And as you can see right here, that would have been a good time to buy. And then here it was not because it was pulling back. But right now you got this bullish candle as well. And then if you look at the history, it had been aligning with the weekly trend. So then you're going to drop to your 4 hour and ask the same question based on where you're at in the market. So now let me show you where this can get a little trickier for some of the newer traders, because everyone say trade with the trend. Trade with the trend is very subjective to when you are where you're at in the market. So we're gonna right now this 4 hour here was aligning with the weekly. How do I know this? Well, I pull out my trend line. So we're gonna go back before all of this happened. The pullback happened. It aligned with the weekly, okay? And I'm going to show you how the daily looks. See, very bullish, okay? And the weekly, same thing, very bullish. So now that I'm on the 4 hour time frame, my bias is bullish, right? It's following the trend line. You can use market structure by identifying that the market is making higher highs. If you are unsure how to do that, look left, look where the last swing point was, and see if market broke above it. You can do that by tracing the market, or for those who like to use indicators, there's an indicator that will tell you what the high. So I'm checking to see if the market breaks these swing points to confirm that the market is still trending bullish and it's making higher highs. This indicator called higher high, lower low strategy is another good one, where you're just looking where it says higher high, you're waiting for the market to break this. And if those who have a hard time trying to confirm, just drop a line and you see that it broke it there, okay? Now, at some point, the market did break your trend line. What does that really mean? Is it a change in trend or a change in direction? The difference between a change in trend and change in direction is the change in trend is where the entire trend completely go into the opposite direction, and then you'll see the daily and the weekly will eventually fall through. So that means we are no longer buying, we are selling. A change in direction just simply means we're on a pullback. So as you can see right here, this market eventually broke this trend line, which tells me that we are in a change in direction. And the reason why is because it never broke below at least, I like to use at least 2 swing lows from the uptrend to confirm a change in trend, especially if I'm on a 4 hour time frame. So like this swing low right here, I mean, you could have used this trend line right here, but this is a little bit steeper. But that would have been another swing low point right here. So here's your first one and here's your second. Did the market break and close below? No, it respected it. So that tells me that the trend is still the trend was a change of direction instead of a change in the trend. And now I'm going to be looking for buys to align with what the daily and the weekly was telling me before. And this is where you have to be patient and sit on your hands and wait, because if you were in this pullback, notice how you got more sellers in the market, okay? And so you're in your mind, you're like, well, the daily and the weekly is buying, right? Because you're on this pullback. You're in here thinking you should be buying, but no, that's subjective to the time frame of what's going on at that moment in the market. So as you can see, in the candlesticks to tell you, there's more sellers, there's more sellers, there's more sellers, sellers. Notice how the bullish candles are not as powerful as the selling candles because you're in a pullback. The sellers are in control. So if you're not good with counter trend trading, then do not enter. Just wait for the pullback to end. Do not enter buys on this. You should be selling because that's what's going on right now. Plus, you got this break-in structure right here, this break of the supply zone. You should be selling, even though it doesn't align with the daily and weekly. Now, to get on the right side of the market, and you don't align with the daily and the weekly, and on the 4-hour, you're gonna wait until trend line. Once again, you're gonna wait until the market breaks your trend line to confirm that hey, it's ready to resume my trend up. And I got it right here. And when you go to the 1-hour time frame, you'll see that it's clear as day. Market broke the trend line, and now you can continue buying. And notice you get more powerful moves when you're aligned with the higher time frame. So notice on your 1-hour, your 4-hour, and your daily candle, look how big this daily candle looks, because you are now trading with the weekly, daily, 4-hour, and the 1-hour trend. So I hope this helps you kind of understand where you are in the market, the importance of time frame confluence, and how it can benefit you as a trader and allow you to catch more pips if you are looking to take more than 20. So I love you guys. Stay tuned to the next one, and happy trading.